Hello everyone, welcome to a new video at the start of the week for Monday the 13th of January, and I'm recording this just after the open of the US markets. We're going to look into the best 5 sectors, which I'm publishing a blog on now every week, and we're going to pick one of the sectors to dive into some individual stocks. But before I do that, I want to take a quick look at what's happening on an asset allocation level, because I think there is a bit of a move underway right now, a bit of an asset switch, asset move, which is starting to work out. So diving right into the first RRG, the first relative rotation graph for this week. This is the asset allocation group, and I've ticked. Let me bring it back on so we can bring in Bitcoin, and then you see how it's distorting that. So Bitcoin is still super strong, although if you look at the individual chart, you may start to see some cracks. But from a longer term perspective, this is a weekly RRG. Bitcoin is obviously still a super strong asset from a relative perspective. Taking this out of the equation and fit the chart again, you've got a more granular picture. And also you see is that SPY stocks are leading. They're still inside the leading quadrant. They're furthest to the right. It's the strongest reading. But they're also rolling over. So the last 5 weeks, you see that momentum, relative momentum of SPY versus FIBA-INX is deteriorating. And it's being picked up by some other asset classes. Notably the US dollar. US dollar is really, really strong recently. And it looks as if it's going to get even stronger in the coming weeks. And the same goes for commodities. After a long time in the doldrums, you'll see that GSG and DJP commodities are starting to pick up again. They're starting to get back to life. And then we have the fixed income group, which is government, corporate bonds, and high yields, still inside the lagging quadrant, but they're all picking up relative momentum. We're not there yet, and they've certainly not crossed over with stocks, but there is an improvement. There's a rotation starting to become visible out of stocks into fixed income, or, well, maybe I should say into commodities and the US dollar, and less out of fixed income, because if you look at the charts of both SPY and GOVT and LQD, you'll see that both are dropping in price, and that's where relative strength actually comes to the forefront. Because what this means is that this rotation here means that at the moment stocks are dropping faster than bonds. So even despite the fact that they're both going down, it looks as if bonds are going down less than stocks, and that's, I think, the most important message from this chart at the moment. So the US dollar really strong, commodities picking up again, and it looks as if a rotation is underway out of stocks into the other asset classes. But stocks, based on the recent move, still a very strong reading in terms of relative strength, but they are definitely losing momentum, losing power for the time being. And this becomes really well visible when we switch this chart to a daily chart, where you see that SPY here is now definitely rotating out of favor, and both government and high yield have already made the turn, and so have commodities and the US dollar. And you can see how Bitcoin has, for the near term, rotated out of favor. So it's a matter of, let's say, art and data to bring together the weekly and the daily RRGs. For Bitcoin, that's a little bit more difficult, but for stocks and bonds, I think the picture is pretty clear. You see that rotation is now underway on the daily chart very clearly, and you see the first effects spilling over onto the weekly, as well for the commodities and the US dollar. We take a quick look at some of the individual charts, starting with euro dollar. I have the dollar index as well. That's right here. And you can see how after that breakout, the dollar index is now accelerating. And, really the first next level of resistance is around 114. And that's the peak that we saw at the end of 2022. Translate that to the euro dollar price chart. You can see that breakout, but it's now to the other side because here the euro is leading. So euro expressed in US dollars. So a declining price for euro dollar means strength for the US dollar. And after the break here, this could even go as far as 95 cents. So parity, less than parity for euro and the dollar. So that's going to be a very interesting period again. And we saw that for the last time back in 2022 when that peak in the dollar index was visible. The next chart I want to show you is for commodities. So if we go to GSG and DJP, then you can see how they've been sort of in a range since, let's say, 2023, and we're on the verge of breaking out. So I'm going to watch that. If you look at relative strength, you can see why they're now inside the improving quadrant and starting to pick up again. And the same goes for GSG, pushing against overhead resistance. When that breaks, that'll definitely be a good sign for GSG and a new fuel for commodities to actually move higher. And you see the RRG lines here where the green RS momentum line is already above 100 and the red RS ratio line is now picking up. And that's why these two are on a strong heading inside the improving quadrant. We then go to the, I'm only going to do government bonds. That's probably enough to make the point here. So government bonds in 10-year, you can see how that's breaking lower. So breaking lower in prices means rising yields. If we do that for IEF, which is the 10-year, then you can see a very nice channel that's now broken. We had a little bit of support here on that previous low. That's now broken and we're now accelerating lower. And we're actually heading to the next support level here, which is around 91.5, 91.5. Nevertheless, the downtrend here is really visible, and that means rising yields. The yield chart is right here where you can see the opposite move and you can see yields picking up. That's usually not a very good sign for the stock market. If we bring that to SPY, let me start with the weekly chart of SPY. And I've already kind of announced that last week that we're sort of breaking below that rising channel line. That little blip here, that's the opening of today. That's the first 20 minutes of trading. So we're continuing lower and it looks as if we're now convincingly breaking that previous low here. So the outlook for SPY as such at the start of the week is not very strong. And if you look at the indicators here is the RSI and the MACD, especially the MACD has a long-standing divergence, which is still looking for a trigger, and that this might well be the trigger for that divergence to start really materializing. And that would mean lower prices for SPY in coming weeks. What would we be looking at? What are realistic levels for SPY to monitor? I'm going to say that the first support level is at the previous peak here. That's 565. That is a decent support level. But if we're sort of reversing this uptrend here, then the next level that comes into play is the former rising resistance line. And if I take the previous high before that 565, we're looking at let's say 525, and that is, well, at the moment it's coinciding, but then we have to drop to 525 this week, which, I mean, nothing's impossible, but I don't think it's very likely. But so the area from 525 upwards to, let's say, 535 is a range. This is also here, this is 540. So this area here would be an area to watch in case we are dropping below 565. And in all honesty, I don't think it's going to be a straight line. If that happens, we're going to see some, lower highs and lower lows, and we'll be able to pick that up on a daily price chart. Very, very likely. Let's take a look at that daily price chart to wrap this up. And here you can see that break in much more detail. So we had, this is 580.91 and the low here is 580.50 and the close on Friday was 580.49. So it is like, that was damn on the close. And right now we're breaking lower. We are 575 was the low. We're now 576, so we're bouncing a little bit off that low. There is an area of support here. There's no denying. So 575 to 565, that's that previous high that I just mentioned, is definitely an area where we might see support. So depending on how the market responds in that support area, we may either see a new low being put into place followed by a further rally, or if that gives way, we need to take into account that we might see 525, 535 area in the next couple of weeks. I think that right now, the upside potential for SPY is a lot less than the downside risk. And I think that's a pretty clear statement pointing out some risks for SPY in the near term. If you look at my latest blog article, that's the second episode of the best 5 sectors, you'll see that the group has been unchanged since the first time I published it. So it's expected. It doesn't trade that often. So consumer discretionary, communication services, financials, information technology, and industrials. Those are the best 5 according to that ranking methodology. We looked at consumer discretion. We looked at all the sectors last week. There's all the individual charts for these sectors are in the article, annotated with a short commentary, so I don't have to look into those. So what I want to do is actually switch to the other 6 sectors, look at from a sector perspective, look at the other 6 sectors. So on the RRG, that means healthcare, materials, real estate, staples, energy, utilities. Those are the lower part of that top 6. And if we take a look at the individual charts there, let's start from left to right. So start with healthcare. Bring up the healthcare sector. Then you'll see that the price of XLV has just bottomed out at support. And the immediate effect is visible on the relative strength line where a small low has been put into place. You can see that the momentum is picking up, and that's why that tail is starting to pick up. Now, this is very early stages. It's the lowest reading on the RS ratio scale, which still makes it the lowest sector on the weekly time scale is what we're looking at. But the pickup is there, and you see the support level. So keep an eye on it. The second one is materials. Now remember that was really a bad sector for quite some time. And if you look at it right now, you see that XLB's price has also found support around a pretty decent support level. We flunked the first one here, but now we are leveling off at support just about like 83.5. Relative strength still not fantastic. A little bit of an uptick, and that's what you see right here. That last week's uptick in XLB, that's that little hook on the green RS momentum line. If we go to XLRE, to real estate, that's a sector that's really breaking down from a price perspective. So lower highs, lower lows, but a pretty big move, aggressive move below rising support. This is kind of debatable. I would say this is a little triangle, but you could argue that there is some support around 39. But look at the relative strength. That's still going down. There's a little bit. We're holding at this low here. That's why that momentum is leveling off, but the RS ratio line is almost straight down. So this leveling off is very early. This is still a very weak sector. I wouldn't buy it at those levels for that matter. If you look at consumer staples, that has been picking up a little bit more. Also here you see the double top in place and executed. We're still have some potential to go lower towards, let's say, roughly 75. Relative strength is going sideways, and you see the up move in relative momentum and how that is sort of changing the shape, changing the rate of change of that red RS ratio line. And that's what you see why it's picking up momentum while it's inside the lagging quadrant. So it's a pickup of momentum, but not of relative strength yet. And then we have energy, XLE. That has bottomed out at support, is moving higher. The relative downtrend still fully in play. That's why the RS ratio line is still well below 100. But you can see that the RS momentum line has picked up and it's now oscillating around 100. That's why it's so very close to the 100 level on that RS momentum scale. Not a super buy opportunity, but also the fact that it bottomed out at support gives us a little bit more of a cushion to the downside, I would say. And then finally, we've got utilities. And here you can see this is also a completed double top pattern. We broke support, and the first support level here is around 72, 72.5. Relative strength still in a range. RRG lines moving lower. RS momentum leveling off. That's why it has been picking up right here. So if you wonder why are those top 5 sectors not looking very good, that's because the market is not looking very good. And that's why when we would sort of bring all them back on the chart, while even though their tails are rolling over, discretionary, communication services, financials, industrials, technology are still the best 5, or the least worst, maybe I should say. The only one that is doing relatively well is technology inside the improving quadrant and continuing, albeit slowly, it's a very short tail, in a positive RRG heading. And then following up with my promise of taking a deeper dive into one sector of the best 5 each week, I want to move to technology for this week. So the technology sector. And then we're going to very quickly, we can do this really quickly, go through the individual charts of some of the individual stocks that have potential within the technology sector. And if we start here, I select the first, and then, the top of the list is alphabetically ordered. AVGO, Broadcom, it might even be the best sector or the best stock inside this group. So let's bring it up right away. Let's see, AVGO. And you can see why, because of that big jump. So do I want to buy it right now? Probably not. I don't like chasing it, although it is a big of a setback from the highest levels. It looks as if we're building up some support here, maybe a new higher low. But this acceleration is clear. The acceleration in relative strength is clear. And really, when this was started to buy, let's say when we had that cross here. So that's back in 2022, and the red RS ratio line has been above 100 all the time since. So still a very good stock. Then this I don't want. ANET, that might be something to watch. So Arista networks, super nice. Look at this. So here we crossed into the leading quadrant. That was at the end of 2023, and we stayed there all the way up. And you see how that green RS momentum line has been oscillating around 100. So that means that ANET has been making these rotations on the right-hand side all the time since the end of last year. And that trend is still there, it's still present. New higher lows are within that trend, still new buying opportunities. And then we go. This is Apple. Look at how that tail of Apple has rotated back up, coming from leading through weakening, and then it's just shaved off that 100 line and is now crossing back into the leading quadrant. And obviously that's an important stock inside the technology sector. And you can see how, despite the fact that prices come down, so what this means is that it looks like a dip in, well, it is a dip in price, but it is less severe than, for example, in this case, XLK or other stocks inside that sector. So Apple, from a relative perspective, definitely starts to be one of the more interesting stocks again at the moment. And let's go further. So here is IBM. Look at that tail. That's inside weakening and starting to curl back up. If we bring up IBM, then you can see how that is still in a series of higher highs and higher lows. And the question is this going to be a new higher low? The relative strength line is sideways, starting to move up. That's why it dipped into the weakening quadrant. But the green line, the green RS momentum line, has been starting to pick up again. As soon as that crosses back up, or as soon as that crosses back up, then, either or, IBM will rotate back into the leading quadrant. So keep an eye on the price chart. And when there is a new low in place, or we're testing support, or there's any other trigger that could fuel a new rally in IBM, or at least a relative rally, then it becomes a very interesting stock from a relative perspective again. Continue our list scrolling through. Well, the red ones we can sort of forget. Look at how, well, this, I want to see how bad this chart looks, because here's Intel. Well, there you go. So we're really strong. We're about to rotate. Well, we're already rotated back into the lagging quadrant. So for Intel, I would be watching this support here, which is around $19, a little lower. If that breaks, got a huge downside risk or downside opportunity, no matter how you look at it. So if you're into pair trading opportunities, then Intel could be one lag, and you could, for example, put Microsoft on the other one. So Microsoft versus Intel, kind of the same category stocks, and you can benefit from the spread between the two without generic market risk for either of those stocks. LAM, LRCX, pretty low reading, but let's take a look at the chart. So here we have LRCX. So you can see why it's bottoming there, because that relative strength line is losing momentum and is starting to bottom out. We've got a very small double bottom completed. You can see how the strength in momentum is picking up, and the low in RS ratio is still there. We need a bit of work before it continues into the leading quadrant, but we have a series of lows now since July. 1, 2, 3, 4, 5 lows, all around that 70 mark. So as soon as we get out of this doldrums here, maybe when we take out $80 on the upside with continued relative strength, then LAMP LRCX becomes an interesting stock within the technology sector. And Qualcomm is equally interesting. Look at Qualcomm. Where are you? Right here. And this is also, look at this. This is bottomed 1, 2, 3, 4, maybe 5 times around $150, which is like the area here and the cluster here. And you can see how that decline, and since August, Qualcomm didn't really decline anymore, and that's when the decline in relative strength started to filter off. That's when momentum started to pick up, relative momentum started to pick up. That's now spilling over into relative strength, into RS ratio. So as long as this 150 holds and you get some sort of trigger inside the price chart with continued relative strength, Qualcomm becomes an interesting stock within the technology sector. And then here, Microsoft, and I think that's the last one in the list as well. And here is Microsoft. And again, the relative strength has come to a low that was in November. We have a slightly first higher low, but we're moving sideways. You can see that translates into improved relative momentum with a pickup in RS ratio. That's why we've got that almost straight line into, what is it, 30-degree angle? At least it's between 0 and 90, that's for sure. So that's a good stock, a Microsoft picking up there. So we got Microsoft picking up, we got IBM picking up, and we got Intel going the other way. So Microsoft, again, series of higher lows still in place. We're kind of at the edge here. If I would draw a trend line here, we're probably touching that right now, but it is definitely not one of the worst stocks. If you compare this stock to the Intel chart that we just saw, I think you agree with me that Microsoft is a lot better, just like LRCX, just like IBM, just like AVGO. So there are definitely some relatively good stocks to be found inside the technology sector. I'm going to wrap it up here. That was it. We did look at asset classes, asset allocation. Euro-dollar, very strong. Commodities picking up. Looks as if money is rotating out of the stock market, so there is a bit of risk in SPY going forward. Commodities seems to be a good place. Maybe some fixed income stuff, although fixed income is also going down in price, but less fast than the stock market. That's why it's improving. That's why the comparison between stocks and bonds is now starting to move in favor of bonds again. The top 5 sectors have not changed. And within the technology sector, we have just looked at some of the more interesting stocks that are worth our attention in the coming weeks. Thank you for watching. I hope you enjoyed the show. Let us know in the comments. And as usual, I'm looking forward to seeing you again next week, same time, same place.